Breaking news, Europe's Achilles heel and possibly America's black swan. Late Friday evening, Alexis Tsipras announced that Parliament would vote on a referendum that would allow the Greek citizens to make the next move, maybe the last move in this never-ending saga. That vote happens July 5th. The default happens tomorrow at 6 o'clock. Now, creditors, well, they have not been amused, and they are determined not to put any more cash until Greece puts in more skin in the game. And I'm talking a lot more skin in the game. Nevertheless, the Greek prime minister, an advocate of the so-called game theory, seems to be in disarray, and that means that the spigots are being cut off. The Emergency Liquidity Assistance Program, operated by EU central banks and overseen by the ECB, cut off. You know what that meant? Greeks were limited to 60 euros at ATM machines, and there was even an additional plea this morning for more money. It was rebuffed by the ECB. Game theory? Game on. All right, guys, a huge day. The market took the biggest shellacking of the year. We were kind of bracing for this, and more to come. Hi, I'm Charles Payne. You're watching Making Money. Let's get right into it and meet the investment pros. Jim Awad, Plimsoll Mark Capital Markets Chairman. Tammy Bruce, Fox News contributor, is with us as well. Hillary Kramer, A&G Capital President and CIO. Matt McCall, founder and president of Penn Financial Group. And Heather Hansen, trial attorney at O'Brien and Ryan. Let's dig right into this, guys. All right, Jim, listen, we know the stakes are high. Circumstances are a little slightly different than they were 5-6 years ago. There was a global meltdown. Greece had more leverage. Greece could say, we walk, Italy walks. It was an automatic domino. We knew it would happen. Maybe not this time. What's going to happen then? Well,
first of all, you're right in what you just said. The risk at this point is much less. And the way the bonds of the other countries, the vulnerable countries, acted today, and the way the euro acted today, the markets are saying if Greece goes, it can be dealt with.
Well, tell the audience exactly how did those bonds happen.
Well, bond yields in France, Spain, okay. Less to a lesser degree, France, Portugal, Italy, they went up today, but they went up from abnormally low levels and are much lower than they were a few years ago. So there was not a notion of panic in the marketplace, and the euro actually went up against the dollar. So the market's saying that either it's going to get solved, or if it doesn't get solved, the euro is going to end up being stronger. And you're going to sort of get rid of Greece, and there's not going to be contagion.
Although the Dow off 350 points, Hillary, this was the worst session in a long time. There was a flight to safety. Our yields were up. Our bonds, a lot of foreign money came into our bonds. And there is a sense that, listen, 170 Friday, 350 today. There's a sense that maybe it could still be something awful.
Well, it could be, Charles. Even though what Jim said about Greece, there isn't contagion there, it's still a trigger. Greece will exit. Greece will default. It's shocking everyone because of the buildup of the European Union. But the answer is yes, there could be some contagion to the U.S. market because there's so much leverage. People have borrowed so much to invest in equities. The good news is it's not a lot of individuals. It's a lot of institutions. It's a lot of that fast money and hedge funds that decided to get real.
You mean like the fast money guys like the Lehmans and the Bear Stearns, like those guys that toppled the whole world a few years ago? Nothing to worry about. The little guy always seems to get hurt pretty good when it's those big guys. All right, Heather, listen, there's a lot of ramifications here. These are obligations. This is money they took in with a promise, and they're not fulfilling these promises.
Listen, ultimately, you're going to see just a lot of changes there. You're going to see a real brain drain with all the young kids leaving the area.
What's left? I mean, I don't even think there's a lot. I hate to say it. I read a report a couple of years ago. Half the country hadn't even been on the internet. I mean, they are chilling out at the beach. There's not a lot of brain to drain.
Well, we know that. We know that the unemployment is way up. The thing that universities there are free, so people are getting the university education, then they're coming to other places if they can. The other thing that I thought was interesting, and I'd like to see what you guys think about it, is Bitcoin. It seems like Bitcoin is sort of a run on Bitcoin to make up for the fact that they can't get money out of the ATMs.
Well, listen, they might be running on Bitcoin, coconut, whatever. I mean, at this stage of the game, almost anything could be used as a currency. But the bottom line is, how do we resolve this situation? And moreover, listen, Matt, 350 points, you can't necessarily dismiss that.
No, you can't dismiss it. I found interesting about today's session was we gapped down about 1%, then we were only down 0.5%, and there was a slow drain the entire day. There was no panic, no big selling throughout the day. So to me, it was just people, taking profits, getting out, big money moving out, maybe some small people panicking, but you didn't see the huge volume throughout the session. To me, though, what concerns me is between now and Thursday, our markets are closed on Friday. If nothing gets done and we have this cloud of uncertainty hanging over us, why would anybody buy? And why would you buy Thursday going to a 3-day weekend with the referendum vote on Sunday? So something must get done in Europe, or this slow move lower will continue.
Although, it's so funny, Tammy, because people say, well, they've been dealing with this for the last 5 years. No, this thing has been building for a long time. I talk about it all the time. This is not new. This goes back a few decades, okay? And it underscores when politicians buy votes. And when socialist politicians buy votes, they really do it right. But at some point, it gets to this. And I don't know that they can save themselves. I really don't. I don't think that they have the educational infrastructure, the manufacturing infrastructure, the entrepreneurial infrastructure. Yeah. I don't think they have the infrastructure that they need to save themselves.
Well, look, and this is when you say you've got all free university. How free is it? It's, you know, this free stuff is destroying a country. And we have seen this ever since really the development of the European Union, this notion effectively of a confederacy, which is what we had in the beginning and wasn't working because you needed real centralized control financially and otherwise, and they're finding that out. Some of the smart people on TV that I watch are saying, hey, they should vote no. They should get out of the EU. They should drop the euro. Because, look, I mean, part of this is happening in that they don't have control of their own currency, so they can't manipulate it and change it to increase imports and exports to try to manage this kind of a problem because they're all linked in. And it encourages this kind of socialist framework that, well, you know, we can relax because we've got the big daddy of the European Union, and it encourages that kind of a slovenliness when it comes to your attitude about the future. Now, if there is a kind of a collapse, or they have to get the drachma back, and they can get maybe some of their Greek mojo back, maybe they're going to have to start thinking about entrepreneurship and better business and working hard.
What makes me a little worried, though, about what Tammy is saying here, Jim, is that the first thing that popped in my mind was Weimar Republic. Printing a currency to solve a problem. I would think that would be the knee-jerk reaction of a country that's trying to get back into the game instantaneously. Okay, they've got their own currency. By the way, the drachma is a beautiful currency. Yeah. And they just print them at will.
But they don't have the infrastructure to reignite to create an export machine based on a cheap currency. They don't have the attitude. They don't have the culture. They don't have the industries. Yeah. So what you run the risk of is you do go into a social chaos. And one of the smartest guys I know in the business, a guy called Wilbur Ross, who we've had on this network, and he said today he thought that there would be social chaos, and Mohammed El-Arian said he thought they would go into a depression. So this could be a case where the rest of the world does okay, and Greece goes right down the drain, assuming we can contain it.
Well, we've got Wilbur Ross on tomorrow night. He made a big bet on this.
Yes.
I cannot wait to hear him tomorrow night at the exact moment they made default against the IMF.